speaking of a 10 EMA trade, whoa, look at this. I mean, if we're back trading, again, I did not take this trade. This is one of my favorite patterns, though, without question. And I'm not exaggerating. I want everyone to take a screenshot of this and print it out for the next time you see one of these trades. Please send it to me. This is what has been named the Bear Shat Pattern. The Bear Shat in the woods. Now, type a 9 if you see tons and tons and tons of bear volume. All right, type a 10 if you also see a bear candle gapping up into a bear candle. Both candles are closing bearish. All right, perfect. Type an 11 if you can see a bear candle closing above the 10 EMA. Beautiful. Now, type in a 12 if you can see the high of this candle is identical to the high of this pretty big bearish candle right here. So now all of this means to you as a swing trader, if, this is a big if we close above that bear volume, how do you feel like those bears are going to feel? They are going to feel trapped. They're going to feel grumpy. Yep, indeed, indeed. So those grumpy bear traders are going to have to buy to cover, and buying the cover is going to cause what to happen? It's going to cause the stock to slowly go higher. Precisely. So we would slowly be growing if that happens. Price is going to rise. So let's go to the very next day. Because again, team, keep this in mind, is what I love about this is I can study this. I can study this chart. And so when I see it in real time, when I'm seeing this in real time, I'm able to go, bang, let's get it. Let's go. So here's what's great. A lot of people will go, hey man, this volume did not take out the bear volume, so I'm not going to take that trade. Is that valid? Does the bull volume have to be more than the bear volume? No. So let me give you an analogy. Imagine you're a sports team and it takes you 20 plays to score a touchdown or to score a goal or to score a unit point. Go team, go. Score a unit point goal, score. And then the opposing team, when they get the ball, they score in 2 moves, 2 plays, 2 whatever. Who is more rested? Who's ready to go? Who's ready to go to battle again? Right? The team that took 2 plays, boom, just scored. You scored, made 7 points. You took 25 plays. I did it in 2. All right. So again, in this situation, the bulls do not have to have more volume. We don't have to have more powerful buying to come in. It can just happen faster. And as long as we make the same amount of movement, the bears are going to get exhausted. Make sense? So how would you take this trade from this stage? Do you still need a close? And the answer is no, because the bull candle has an upper shadow. The bull candle has a little tiny upper shadow. That's the last grasp of the straws for the bears, where the bears are like, come, push. They want to trade it down. So that one little pink, those are the bears that are trying to be naughty bears. They don't know how to be naughty bears. They're trying their hardest. They don't know what to do. So you no longer need a close. Before this candle comes in, I would have asked for a close above this resistance because the trend is still bearish and you want to make sure that the bears get invalidated, that the concreteness of the decision is in play. The gavel has been banged because at this stage, what I'm looking for is just the awareness, even though I didn't take this trade, and I will always tell you guys if I took a trade or not, and I'll let you know how I won or lost on it. I didn't take this trade. I want to analyze it because after this trade, I will show you a trade that I did take that's similar to this one and how well it played out based on volume and candles, because that's almost exclusively what I use. Okay, so no questions. You guys are great. All right, beautiful. So the stop loss on this trade is going to go here-ish. somewhere around here. It doesn't really have to go below the all-time low. Really, there's no actual reason for us to have taken below this candle, right? There's no reason for us to close below that candle, but just in case some type of wick or something comes down there, I'll put it below a few other candles, but this is a perfectly adequate stop. And then the next candle that comes in, bang, boom. What a great gap. Now, this is a day trade worthy gap. Why would this be a day trade worthy gap? There's one answer that I'm looking for. It's a very easy one. Because it opened above the prior high of day. That's it. That's how I determine if I'm going to take a trade or not. It took out the pivot. It created edge. It opened above the prior high. Boom. I'm going to day trade this. Now, could I have day trade this bearish? Sure. I could have looked for a bearish trade. Could I day trade this bullish? Yes, obviously. The point is, the fact that this thing opened above that prior high, I am going to be getting in bullish or bearish, but I'm going to be getting in. I'm going to be watching it for a trade. And this would have been just a really nice little move.